Good afternoon, everybody. This session is not about cryptocurrencies. It's about real money and real trade. We'll talk about blockchain for trade finance. I'm Emmanuel Gann. I work at the World Trade Organization. I'm a senior analyst there, and I lead WTO work on blockchain. I'm the author of a recently published book on blockchain and international trade that is entitled, Can Blockchain Revolutionize International Trade? And I touch upon the issue of trade finance in my publication. And I also lead a WTO effort on SMEs, and trade finance is a key issue for SMEs. So we have with us today four great experts in the field. We have Gert Sylvest, who is co-founder of TradeShift. We have Wille Sointu, head of emerging technologies at Nordea. We have Nikhil Nayab, global head of blockchain payments at Conduent. And finally, we have Jason Kelly, who is general manager of blockchain services at IBM. Now, trade finance lies at the heart of international trade. About 80% of international trade is financed by some form of trade financing, be it letter of credit or supply chain financing. But the way this system works has many drawbacks, and many requests for trade finance remain unmet. The Asian Development Bank has estimated that the trade finance gap stands at $1.5 trillion. And many see blockchain in this sector as a potential key enabler to reduce trade costs, to facilitate trade finance processes and ease access to trade finance. So this is what we will discuss today. And I would first like to turn to you, Gert. You're the co-founder of TradeShift, who is a cloud-based network platform for supply chain finance. And last year, you actually decided to turn to blockchain. So why blockchain, and what can this technology bring that another technology cannot bring?
Yeah, so very good question. So I heard a statement on one of the conferences earlier today that I think was a little bit remarkable, and I think it went like this, that it's a very few very large companies sitting on 90% of all the supply chains. And what the speaker said was that basically these people didn't need really blockchains because they had the force to onboard their suppliers onto centralized solutions. And I think that statement is interesting because I 100% disagree. And actually that was one of the starting points for TradeShift. That was basically seeing that for the past 40 years between companies, almost no digitization has taken off. So I think one of the fundamental premises for driving digitization in supply chains is basically how is it that you can incentivize participants to join this digitization. And for 40 years, that hasn't really taken off in the enterprise space. And I think what is happening in the blockchain space today is super interesting because essentially everything you see from ICOs to people tokenizing real estates and so on is that we are seeing the beginnings of how can you create a fundamental infrastructure for the exchange of value and sharing of value in broad ecosystems. And I think supply chains are super good examples of such ecosystems where up until today it's been very difficult to figure out how are you actually going to share the value that you create in the supply chains between all the participants because they inherently are so different. And I think from that perspective, I think that's why TradeShift is investing in blockchain today. That is to say, we're moving a lot of these transaction interactions between companies today, $500 billion worth of transactions. And I think the step to actually turn some of these transactions into, not just digital versions of paper transactions, but into real digital assets that can be exchanged globally without all the friction that we see in the traditional financial systems. I think that has huge potential, and that's the perspective I think here.
Okay, great, thank you very much. Let me now turn to Wille and Jason. Both Nordea and IBM are members of the We.Trade consortium, which is a bank-centric platform for trade finance. I really would like to have your views on this platform, the We.Trade, why blockchain and what it has brought. Maybe Wille, could you start by sharing a few words on what We.Trade is for those in the room who may not be familiar with it?
Sure. So We.Trade is an open account trade finance solution for SMEs for European trade. Now, that's a lot of words. That doesn't make a lot of sense for a lot of people. But in if you try to simplify it to a specific problem that we tried to solve, it tries to solve the trust problem for European SMEs who want to export goods to another country inside the European Union. The problem in this trade today is that, especially in the SME space, a lot of the trade is based on prepayment. So you require full prepayment of the entire shipment in order for you to be able to send it, because there's a significant trust gap between the buyer and the seller. So what WeTrade does is it basically digitizes the trade agreement, tracks the progress of the trade agreement and the processing of the trade agreement on the blockchain, and then automates the execution of payment conditions on the other side. So effectively what we want to do is we want to allow the SMEs that perhaps did not make a trade because the prepayment condition was too harsh for the buyer. We can now have a digital agreement that can be executed automatically, and therefore closing the trust gap to an extent. One thing I still want to add there is that we've also added some of the traditional financing instruments onto the WeTrade solution. So now that we have a digital trade agreement in place, we can have a bank payment undertaking, which basically guarantees the payment on the buyer side. And you can have invoice factoring or invoice financing on the seller side, which allows you to have capital immediately as the trade agreement is assigned on both sides. So that, in a nutshell, is WeTrade. I do want to mention that if you go to our website, nordea.com/we.trade, there's actually a full website that explains what the product is and what it means for you as a Nordea customer. Now, this is actually not something that you see many times with blockchain solutions launched by banks, because they typically tend to be POCs and pilots. WeTrade is really much actually a real product that we're right now selling to our customers, and we're signing up customers as we speak. If you go to the country website, like nordea.fi/we.trade, there's a button there that allows you to order the service as a Nordea customer. So it's very real. It's right here and right now, and we're trying to scale up the system as we speak.
Thank you very much. And indeed, you were saying it's a real product, it's real, it's out there. It's actually one of the few projects that is in production. It's very often presented as a success story. So Jason, why is WeTrade such a success? What are the ingredients that made it a success? And what were maybe the key challenges from a tech perspective that you faced in launching that product? What would you do differently if you had to do it again?
That's a lot to cover in a few seconds. And Villa did a great job of explaining, and I'm glad you went first, because to net it, it's a kick-ass example of why blockchain is real. That's it. And you have something very complicated, an old problem of giving access to capital. And so why blockchain if it's an old problem? Can't you just solve that with what already exists? Well, it wasn't just an old problem, because the new challenge, in fact, is trying to give that access to capital to a small, medium-sized enterprise client that wants to benefit across multiple banks. So that's where it becomes complicated, because how is Nordea going to trust HSBC and trust Deutsche Bank and trust Santander, Caution, and all of them? Each one of those banks has their client set. Each one of those banks knows that, well, if we could just share a little bit of information between buyer and seller, we could have all boats raised with higher tides. How do we do that? There was no answer for that. So it's not why blockchain, because blockchain is just a big, bright, shiny thing. It's just a little piece of technology. But as I said, it's a kick-ass capability when you add the technology with the outcome that it brings. And it only brings two things that have been somewhat the golden fleece with data, because in the center it's just data. Or it's your mic that doesn't work. Somewhere in the center it's one of those two. And in the center, you say, okay, if it's just data, what's been elusive? And it's been the ability to give shared access, shared access to that data, so that each entity can see what they need to see or want to see in a trusted way, and then once they see that data, that data is the right data. That's it. And for those who don't understand blockchain, I just did it in like 30 seconds. Put that on YouTube. So that is all you get. And then when you do it in context of, there's a man that knows how to solve a problem, thank you. You sign you up for blockchain. So it's that simple, is because now you can get trusted shared access, permission access to data, and when you get the data, you know it's right. Well, if I can do that, then I can say, hi, I'm HSBC, and I don't mind working with Deutsche Bank because I can share it. And Nordea, I want to make sure that you see what you see, and we all will get greater throughput when we're availing finance to all of the small to medium-sized enterprises. Lessons learned. Lessons learned is you actually get more benefit than you plan if you plan well. And what happened was the objective of WeTrade was not to come up with a POC, a proof of concept, or a POV, a proof of value, because that may, I just learned this, it may lead to a POI. Anyone know what that one is? It's audience participation, POI. Anyone? Proof of incompetence. And so they were set not to be incompetent. Instead, they said, listen, let's plan to go to production. We're not going to plan just to do a test. And so they started from the very beginning with design, and they planned to be in production in a year. Not something MVP in a year, but in production. So they planned right, planned well, and had all kinds of missteps and falls as you do, along with any provider that's doing something for a first of a kind. And they realized that was going to happen. So they were realistic in their planning and set their expectations at the right level. And now they are the most premier production-ready trade finance network anywhere in the world. So, you know, here's to WeTrade for doing that. And here's to WeTrade, I think, for, you know, one thing that they did very well is that they architected their platform in a very open manner. Because what's 13 banks now started with 7 banks. And Nordea and Santander joined right before Sibos 2 years ago, and they could jump on this platform that was open. And then, oh, guess what? Batavia, which was another trade finance network competing, started with a similar architecture that was open, and those two were able to go together. Now, it wasn't totally by accident. That's where I will get to fly the IBM flag for a second, was that we do believe in an open architecture. As a matter of fact, we have 34 billion reasons to believe in an open architecture. At least that's what the acquisition of Red Hat says, for $34 billion. That was a joke you made out. Just got 34 billion, never mind. We believe that, and I think that that's where WeTrade is going. And now, as you just heard, you know, enough of the IBM commercial. The fact is, they're quickly adding new capability. That's what they did, planned early, planned for future capability, not just for a POC and a pilot. They did it with an open architecture, trusted partner that they were ready to go forward with, and they've been successful.
And one thing I just want to add quickly. So if you go to the Nordea website that describes WeTrade, you will not find the word blockchain on that website, because our customers do not care. They want better, cheaper, faster services, which is exactly what WeTrade does. So the value proposition is at the core of the messaging in that website.
Yeah, thank you very much. So 2 very important points here. First, plan for production, not for a POC. And 2, governance, which is something that has been discussed already extensively in some other panels. Tech is only 10% of the story. Governance is critical. And I think you made that point very well, Jason.
Yeah, but I think also plan for open architecture. I think that's a central point in a lot of the effort that's going on in the trade finance ecosystem. Yeah. So I think open architecture is really, really important. That lets various members of an ecosystem actually come together to collaborate in a meaningful fashion. Mm-hmm. Mm-hmm. And you know, I think that's at the heart of it, right? How do you, it's a very large industry, it's gazillions of trillions, spans the entire globe. There really is never going to be a one-size-fits-all. There are fragmented digital islands across the globe in trade finance. You know, just yesterday, I think SoftBank invested $800 million in a fintech, in a UK-based fintech in this space. And then, you know, there's Marco Polo that's got another group of 25 banks on it. But you know, if you think about it from an industry perspective, it's letting these digital islands collaborate And to do so, kind of create that open architecture very much from the ground up. I think that's what will make the industry overall successful. We don't play in trade finance, although we do about $800 billion worth of business facilitation across the globe. I think it's the open architecture that will make a difference.
Mm-hmm. Great, and you're actually bringing me to another point that I was going to address a bit later, the question of interoperability. But maybe before we touch upon that point, I just wanted to turn to you, Nikhil. You've worked with different consortia, and you have a lot of experience on the payment side. So from the payment side, what value do you see in blockchain, and how can this technology help pierce the 10 trillion trade finance industry?
Look, I think historically, payments have always been critical to business functions, and even today, it's really just money that moves across the globe. Oftentimes, the sender and the receiver of the money isn't really sure why is that particular account being debited at a granular level. And what was actually remitted back into a different bank, what was the actual reason for that money coming in. So from the perspective of payments and blockchain, for me, it's a story of metadata. Ensuring that the architecture is open, ensuring that the architecture that supports the movement of money is also able to actually carry the metadata, which is effectively the reason for the payment. And look at your own credit card statement. Mine's got a bunch of Uber rides, a whole bunch of Amazon orders. I actually have to go to Uber's website. I have to go to Amazon's website to really figure out what is it that I ordered and if the charge is actually correct. Try to take that to an organization that's transacting hundreds of millions across the globe in many, many different areas. The fractured sort of fabric on which payments run is a problem itself. Correspondent banking networks, opacity of FX rates, and timing delays, and so on and so forth. A lot that's being addressed in Swift GPI, but at its heart, in addition to all of that, it's a question of metadata and ensuring that the metadata is available to various members of the ecosystem. That's what will create a markedly improved infrastructure to reduce fraud, because banks don't know oftentimes why is that particular money that moving through its channel, and you need to be able to support all of those transactions with data. Mm-hmm. So that's the kind of blockchain story when it comes to payments. And in trade finance, it's basically the same thing. There's going to be an explosion of the number of payment transactions because all of these are going to be automated. Demand and supply will increase. As Jason was mentioning, more and more businesses will come in to take advantage of these financing opportunities. What that translates into is every financing opportunity, well, is finance. What that means is money has moved real money has moved between real bank accounts. And that leads to an explosion in my mind in payments. And we kind of are basically picking that as our sweet spot.
Mm-hmm. Now, you just mentioned explosion of payments. One issue that very often comes up in the context of blockchain is scalability. How scalable are the different projects? So one question that I would like to ask you is how far away are we from large-scale applications of blockchain in trade finance? If you had to give me one number to start with, what would it be, Gert? How many years away? Large-scale applications. What?
That's a good question. I think we could be actually very close to that point, so talking 1 year, because I think there are significant volumes going about. And I think one of the key kind of challenges figuring out here, that is how you marry what's going on in the traditional world today and create, let's say, a digital twin of that in the blockchain world and make it fit some of the existing regulatory regimes. So in a way, I think that's the hard part, because we do have the volumes going around. Mm-hmm. So, between banks, obviously a lot of volume going around. So the question is, where is the advantage of actually putting that on the blockchain? Mm-hmm. And I want to mention one example, which I think is kind of, think of it in two stages. Right now, I think there's a lot of effort going on in actually optimizing the existing financial instruments that are used in trade finance. But I think if we look at something as simple as the invoice, how do you settle an invoice? And I think the smart contract that we know about in the blockchain, if you imagine you put an invoice on that form, so basically if a buyer were to say, under these conditions, I'm willing to actually pay my invoice, so that ahead of time, the 30, 60, 90 days before an invoice is paid, you actually know ahead of time that a contract is going to execute that payment, it's as good as money. And I think when we get to that stage, and that's something I think the blockchain is perfectly suited to do, I think we'll have to reevaluate a lot of the financial services we are applying in supply chain finance today and say, what's the next generation of services? And to me, going to that step and moving significant volume of invoices or receivables to the blockchain is really a question of fitting it into the most suitable regulatory regime.
Ville, any views on that? You're the only bank representative on the panel.
Yeah, so well, I'm going to, first of all, narrow down the question to open account trade finance. And then I will break it down to 3 parts. The business case for building open account trade finance digital networks is there. We have done it. We have proven it. The technology to deploy it is here, and it works. So the third part then is, how do we then actually get people to adopt these networks? How do we scale the networks? How do we kind of make sure that these transaction networks, as they come alive, they also interoperate? Now, we are in the very first stages of that. So we're just now seeing the first networks come alive, WeTrade being the first, of course. And we've already kind of connected to, for example, eTrade Connect in Hong Kong. So we already know the interoperability aspect is also an achievable goal. So to answer your question specifically, when, I would say now. And in large scale, depends on our customers. We, of course, hope that it's going to be in the next couple of years.
Now, Jason, you were telling me you were the pessimist.
I had to, well, I'm a pessimist.
What's your view on that?
And so I literally pulled out my phone so I could look at the Nordea site, and it says, after a successful soft launch in April, Nordea now makes the WeTrade platform available to all our small, medium-sized business customers. So that says that, I don't think Nordea could say that on their site and do it if they didn't believe it was already at scale. So, and he closed where I just started there. So, but is that generally accepted scale? I think that there is an adoption, and this is what's key. Scale and adoption is 2 different things, and I think that adoption comes with the ultimate capability, and that's satisfaction of the user experience. And that's the end user experience. So the small and medium-sized enterprise, in this case, ultimately the consumer. And that's where I think we have the fast track to make, so that it's a pull and not a push. And for reference, we know that HTTP/IP took 30 years, 3 decades, to become ready for business. And what we just gave by example with Nordea, We.Trade, took from inception, not them themselves, but from blockchain's inception to them being successful, 8 years, so short of 1 decade. So if we're moving at a third of the time, typical adoption curve is 5 years for a new technology. So we're looking, just at 1.5 years before we can say, look, that adoption should be there. And if we're doing our jobs, and you're doing your jobs as consumers and also business leaders, that's what we should expect.
Mm-hmm. Now, Nikhil, you referred to the digital island problem and the question of interoperability. Anything you want to add on that, or any other roadblock that you see regarding possible large-scale implementation?
Yes, I think he picked one word now. I would pick the other one. That's today. I think technically we are there today. I don't think that's the technology can support this. Clearly, there are some wrinkles that need to be ironed out from an interoperability perspective. But my belief is that all technical problems are resolved if there is sufficient demand for the technology, and if the various members of the ecosystem, of course, have a better experience, but actually have the economic incentive to participate. There's various different business models, that are around, but I don't think, experience alone is going to fund, this next generation of the technology evolution. And we need to be able to create new business models such that everybody who participates in the ecosystem starts to see new lines of revenue come up and effectively add to their bottom line. Interoperability, again, the problem can be solved if there is sufficient economic demand for it.
Mm-hmm. Okay, we have less than 1 minute. I think you wanted to make a quick point. And then I would like to ask each of you to say one word that would summarize your key thinking on the potential of blockchain for trade finance. So Gert, just in a few seconds and then one word.
Yeah, so reflecting on the comment about creating incentives. So I think, again, for 40 years, there has been no lack of technology, standards, consortia, and so on, driving digitization of supply chains. I think the inflection point here is really when we actually incentivize companies to digitize. So it's not doing fundamentally unconnected processes, like having to retype their receivables into yet another portal or anything, but fundamentally moving digital information between people. I think that's when we are talking the true scale and getting into the trillion numbers. That needs to happen. So we have to think about the economic models and the business models underlying this. So I also agree it's not a technology problem.
Okay, go back to the governance problem and human problem.
Yeah.
Your word, one word, that summarizes your thinking about the potential of blockchain for trade finance. What would you say?
Can it be 2 words?
2.
Digital assets.
Digital assets. Wille?
Yeah, I'm just going to piggyback on what Gert just said here. So this is turned out to be less of a technology problem, more of a social coordination problem to get this network to up and running. And we were surprised to notice that a vast majority of the work that we put into WeTrade was actually legal work. So we actually had to come up with a rule book that complies with the legal conditions of each and every country where we deploy this. Now, this also puts a kind of condition on how fast we can scale outside of these jurisdictions, because we would rather interoperate with existing networks in these other jurisdictions. So that would be my kind of conclusion. It's social coordination, integration to legal frameworks, and kind of making this new digital network understandable for the risk officers inside the banks. So you need to translate the technology into risk language, so to say.
Thank you very much. We're running out of time, actually.
And my word is also 2 words, which is customer value.
Thank you. Nikhil?
So we're out of time. I had a longer response, but one word is real.
Real, okay. Transformative. Well, thank you very much to our panelists today for a great discussion. A big round of applause. Thank you.